understand which are the segments that are buzzing, or which are the themes that are now shining bright, because we are seeing some sort of a sector rotation in the market. We have Karthik Kumar, who's the fund manager at Axis Mutual Fund, joining us on the show at this point in time. A very good afternoon to you, Karthik. Thank you for waiting by patiently. And Karthik, what exactly is happening in the markets? Because we are seeing day by day some sort of a sectoral churn that is taking place. Which side of the fence do you think the markets will lean? Do you think it will be the banks that have always been touted to be the sectoral leaders to take the baton ahead, or it will be some other sector that will move forward first?
Thanks for having me on the show. As you pointed out rightly, we've been seeing rotation not just over the last month, but over the last 2 or 3 months. And what we've seen is rotation not at several levels. For instance, you started out with sectors, but if you look at styles for a moment, the two styles that worked fantastically well over the last 2 or 3 years, which is growth and value, whereas quality kind of suffered over the last 2 to 3 years. And what you're seeing over the last 3 months is kind of quality making a strong comeback over the last 3 to 4 months, whereas value and quality have taken value and growth have taken a step back. If you look at the differential between the performance of a mid cap and small cap versus large cap, that has closed over the last 3 months compared to what we've seen over the last year or two. And even from a sector perspective, sectors that did well initially, be it capital goods or be it pharma or be it two-wheelers, all of them have shown lesser degree of outperformance, whereas sectors that like IT, metals are catching up. And that applies at the stock level as well. So I think we are seeing rotation along several dimensions.
Okay, so that's the view coming in generally on the markets, but also share with us your view on what you are making of the performance of the entire IT pack, given that we already have TCS's numbers out now and they've not been at par with what the street was expecting, and you also have other IT bellwethers reporting their numbers over the coming week. So give us a sense of what you are making of this sector, and if you had to play this sector, would it be via the large cap or the mid cap IT companies?
I think first to start with my positioning, I'm kind of flat to slightly underweight IT. And I'm playing it through predominantly large caps, but it is more a stock-based call rather than a sector-based call in terms of where to be within IT as a space. And while the thing with IT as a space is the earnings expectations have kind of moderated. So what is important aside from the numbers is to see what is the kind of commentary we get and what is the level of confidence in terms of just the environment going forward in the next couple of quarters. I think that's something that needs to be watched out, and especially focus on certain geographies and certain verticals becomes quite important, and to see how demand evolves over there.
I see your portfolio, at least the current positioning of Axis Quant Fund, you're underweight on metals and commodities as well. Has the China stimulus not given you that much of hope, like the rest of the market also is now actually doubting the China stimulus, right? Because they believe that this is not enough and not sufficient of a support for the economy to see an uptick. We saw metals rally massively when this stimulus announcement had come. But do you think that this is not supportive? It will not do much for the metal space as well?
I think it is too early to call it one way or the other. As you rightly pointed out, there is a thought out there that maybe this is not the end of it, and we may see further steps down the line. So I think we need to wait and watch in terms of what is happening there. As of now, I continue to remain underweight metals and commodities in general because I don't see much of a growth impetus coming from there. Obviously, China is an event-based thing, and which is why we need to monitor that and its impact on metal prices and subsequent impact on companies. But what you're seeing right now in terms of flows is essentially people who are nimble, like hedge funds and so on and so forth, investors who are nimble, taking advantage of the valuation differential between our markets and the Chinese markets, given the extent of outperformance of our markets over the last 3 to 4
So I just wanted to understand then what would change your stance from an underweight to an overweight when you talk about the metal index and the commodities linked sector. Is there any triggers that you're watching out for, that you watch out closely if you have to change your view on that space?
I think what we need to see is if it is going to be driven by China, what we need to see is macro over there stabilizing, demand environment there across sectors stabilizing. That in turn would have a positive ramification for metals as a whole, and which should feed through our companies, which should have a positive feedback loop into our companies as well. So that's why I think it's while the stocks right now are rallying on the news, but whether that rally is sustainable or not remains to be seen, and will depend on how these developments continue to kind of evolve.
Okay, Karthik, thank you so much for joining us. On that note, we'll slip into a very short break on this edition of Markets at Noon. We'll be right back and we'll keep the discussion going on the other side of the break and make sense of everything that the market is going through right now. But we'll be right back. You stay tuned.